This is a real pleasure and honor for me this evening to welcome all of you here to the American Society Council of the Americas. I also want to thank everyone who is joining us here tonight by webcast. I want to thank our webcast sponsor and sponsor of this evening's event, Telefonica. Thank you so much. They've sponsored our webcasts around the world for the last year plus, and it's been really wonderful. I'd like to thank Cate, Ambrose, and the Latin American Venture Capital Association, which is just an amazing organization, and Cate has done an amazing job taking it from a baby organization to what it is today. Congratulations. And for partnering with us on this program. This program, for me personally, is so important because for the few of you that know me for a long time, entrepreneurship, venture capital, and investing with entrepreneurs is my passion, while it is no longer my profession. But so to be able to do something with Cate here this evening is really important for us, and we hope that we can do more things, maybe even some things in Latin America. So Cate is going to introduce all of the speakers this evening, and the panelists, ask the panelists some questions, and then at the end I think you're going to open it up for questions and comments. So again, thank you all for joining us. Thank you, Cate. Thank you, Telefonica.
Thanks so much, Susan, for that introduction. Susan's also a member of the board of LAVCA, and it's great having this very productive relationship with Council of the Americas. This is about the, I think, third or fourth year that we're collaborating with the council on a panel, and each year we pick a topic that we see the trends in Latin America from the data that we collect in LAVCA and what we hear from our member firms. It was actually the council that suggested the topic of innovation tonight. And I kind of, said, sure, we can do anything. Innovation is fine. And then all of a sudden, we sat down with the research department and started thinking about just what that meant for LAVCA to host a panel on innovation. Does that mean we're talking about venture capital? Does that mean we're talking about technology innovation? How should we address this discussion? So I have a few slides just to sort of set up the topic, and then I'm going to introduce the panel. I'm really delighted to have so many of our great member firms here tonight represented on this panel. So very quickly, I think most of the people in the room are familiar with LAVCA, or the Latin American Private Equity and Venture Capital Association. I would only highlight that each year that we come and do this presentation and present this slide, the number of member firms increases. We added 30 member firms this year. We're now over 160 member firms, from global asset managers all the way down to accelerators and small venture funds on the ground in Latin America. This is some of the research and products that we produce. We have a very dynamic website, and it's a great resource. Frankly, of free information for non-member firms as well. Students, we have a lot of MBAs that use it. There's a newsletter there, and every deal that gets closed, every transaction that happens or fund that gets raised in the region, we're publishing on our website if it can be made public. So innovation in Latin America. Well, one way that you might think about innovation is patents. Again, we looked around and thought about, what's being benchmarked out there. I think patent registrations is a measure that the World Bank and others use to describe which markets in the world are at the forefront of innovation. But we decided patents filed is not a proxy for innovation in Latin America. You'll see on this chart that number of patents filed per capita does not reflect Latin America ahead globally. In fact, it's on that indicator, Latin America is sort of more towards the bottom, with the European and developed markets leading. But we thought another way of identifying or talking about innovation in Latin America would be the adoption of new products, production processes, marketing methods, and business models. That's a definition that we found at the European Business School, INSEAD. And I think that's a really appropriate way to think about how private equity investors and venture capital investors bring value to both existing companies and new companies in Latin America. So you would normally think that this presentation would start with venture capital and technology startups, but what about traditional businesses in areas where in traditional sectors, Latin America is competing very effectively. In the case of Mexico, we have the automotive industry, where we've seen more and more global firms opening franchises and manufacturing. I mean, there's been a wave of increase and decrease in car manufacturing in Mexico, but the trend is clearly on the positive side right now. And as we did a little research around this, we saw everything that's been published on why Mexico has been able to compete successfully in car manufacturing alongside European manufacturers, US, et cetera. It's clearly a sector that Mexico has targeted that they want to be competitive on globally, and they've put the human capital, investment in R&D and in plant development and automation into the sector to be able to compete on a global scale. In Brazil, we have the example of agribusiness and agriculture, where Brazil has been leading the world for several decades now in innovation around agribusiness. Embrapa, the government-sponsored innovation agency around agribusiness in Brazil back in 1973, made a bet on this sector. They are at the forefront globally of seed innovation, food production, and have exported the technologies that have been developed around agribusiness to many other markets in the world, including Africa, where they've been innovating. And as you can see some text at the bottom, you know, that is reflected in productivity, and what Brazil has been extraordinary in succeeding in competing and producing globally, and compared to even markets like the US and Europe. In fact, much higher productivity than in those markets. And in Chile, we have the example of mining. We all know that it's a country that has phenomenal mining reserves, but that doesn't mean that innovation and high quality technology isn't required to compete globally in these sectors. And you can see from this chart, that's Chile at the top globally, not only in production, but also productivity and investment in those sectors. So it's an area where Chile had decided that not only were they going to be at the forefront of production, but they were going to be at the forefront of automation, robotics, and competing globally in the mining sector. As we all know, Chile has also been at the forefront of using the reserves that they have to really put that money to work in public programs around innovation. The next slide talks about Startup Chile, but here's an example where Chile said, we're going to compete globally on mining, and actually, rather than saying that we're going to do, this was a conversation I had with some of the people at Pro Chile last year, they were thinking about a roadshow in the US and bringing some technology entrepreneurs, and what technology entrepreneurs can we bring to New York and to Silicon Valley. And a few months went by, we had another meeting, and they said, you know, we're actually thinking that it might make more sense to bring mining companies, because that's where we're at the forefront, and there is actually some really interesting innovation happening around that sector as well. And so they launched this fund, the Phoenix Fund, to finance exploration projects with over 10 years, and it's government money going into innovation around the mining sector, where they say that they can compete globally. But as most of the people in this room are probably familiar, Corfo has also been very ambitious in the launch of Startup Chile, a program that's been around for a few years now, since I think about 2009. And one of the interesting sort of markers for Startup Chile, it's a relatively small country, is the focus that they had on bringing foreigners into the Chilean market. So I remember when it was first launched, it was really very much focused on attracting foreigners. You can see that actually US entrepreneurs lead in terms of the, the number of entrepreneurs that have participated in this program, well ahead of Chile. In fact, when it was initially launched, Chileans were not invited to participate, which created some political conflict. But you can see Argentina, India, from around the world, from around Europe and around Latin America, entrepreneurs taking part. I think this has been, frankly, a really interesting example for the rest of the region, and something that we at LAVCA see as a hallmark of the trend of innovation, new companies, and venture capital in the region over the last few years. And that is the participation of foreigners going to Latin America and working alongside Brazilians, Mexicans, Argentines, Chileans in each of these markets, just as we see the flow of Latin Americans to Silicon Valley, to New York, to Miami, to take part in startup programs and build those bridges. So the internationalization of that creative, innovative process has been a major driver over the last few years. The model is now being replicated across Latin America. Startup Chile has bred Startup Brazil, Startup Peru, Impulsa, and Colombia, launching Startup Colombia. So it's a model that's obviously attracting attention. Actually, Silicon Valley, the term that's been coined and copied around the world. We could talk about that maybe a little bit on the panel, but it's clearly a model that is being replicated across the region. And this is just an example of the significant both public support with development banks such as BNDES and FINEP in Brazil, regional banks such as FOMIN and CAF involved, Corfo in Chile, Startup Chile, Nacional Financiera in Mexico, and Bancoldex in Colombia, along with the many incubators and business accelerators. Two of the logos, actually two of the logos listed there today are on our panel. So it's been a tremendous amount of new activity and new players over the course of the last 3 or 4 years, many of these being new, very recent efforts. This is just some very brief LAVCA data on what we've collected over the last 5 years. 34 billion raised by more than 200 funds. And if you look at the breakdown, 61% of that is private equity. This is by number of transactions, not by dollars. But almost 40% of that going into venture investments. And then you can see the breakdown on the venture side between seed, expansion stage, and early stage. But the number of transactions in that space has been growing exponentially. Each year we collect more data on early stage activity and more deals are happening. Highlighted VC deals in recent years. You see the same sort of consumer trend that we see in traditional private equity around education, healthcare, mobile platforms, e-commerce. And then I just thought it would be interesting to bring a couple of case studies to this panel, close with these couple examples that we see, thinking of all the different ways we can think about innovation. So Netshoes is one of the e-commerce startups that has been backed by some of the leading, both international, as you can see with Tiger Global, and local Kasich Venture VCs in the region. There were a number of different e-commerce shoe launches in the course of the last 3 years. Shoes for You is one that recently went under. It wasn't enough for the VCs that back this company or the entrepreneurs to simply say, we're going to sell shoes online, we're going to do a copycat of Zappos, this is the Latin American Zappos or the Brazilian Zappos, and there we are, it's a success. It's actually a very competitive space in Brazil with multiple players competing for that segment. And so Netshoes really upped their game in terms of the consumer interface and betting particularly on mobile commerce. So not only on internet access through laptops and that type of thing, but how the platform would be working on mobile phones, since so many Brazilians are accessing the internet through a mobile play. And again, one of their competitors have gone away. It'll be interesting to see how it ultimately plays out for Netshoes. Another interesting case is the case of Globant. I don't think you would necessarily describe Globant as at the cutting edge of technological innovation, but in 2003, they decided that they were going to take advantage of the really high quality, creative, innovative technology professionals in Argentina to compete with India as a source of, as an outsourcing base. So from 2003 forward, here we are 10 years later. They've most recently filed for an IPO on the New York Stock Exchange. I've just seen a couple of days ago in the press that that's going to be happening in the first quarter of next year. But they have been successful in competing with India and other outsourcing markets around the world to land clients like Google and Coca-Cola and Disney, Electronic Arts, etc. So clearly there are a lot of different ways. This is just one more example, a lot of different ways to think about how Latin Americans and Latin American innovators and entrepreneurs and VC investors are thinking about innovation. So with that, I'm going to open up the panel to discussion. And again, we have a really interesting mix of LAVCA members here today to lead that discussion. I'm going to ask each one of the panelists an initial kickoff question. I'll just go quickly down to introduce each one. Pedro Sirotsky Melzer is a partner at eBricks. eBricks was born out of RBS Group. RBS Group is the second largest media group in Brazil, and they launched a digital strategy a couple of years, I don't think it was more than 2 years ago, about 2 years ago, which quickly became a standalone venture fund, now actively investing in e-commerce and other types of technology startups in Brazil. Next to Pedro, we have Mariano Amartino of Wayra, relatively recent addition to Wayra, heading Wayra Latin America. As many of you may know, Telefonica being the sponsor of this event, Wayra is the accelerator that was launched pan-regionally by Spain's Telefonica about 3 years ago. I'll let Mariano do the numbers, but it's really impressive the number of entrepreneurs that have passed through their accelerators just in the last 3 years. Next to Mariano, we have Tom Speechley of Abraaj Capital. Abraaj is a very large global, based out of the Middle East, growth equity and private equity fund. And they entered the Latin American market about 1.5 years ago when they acquired Audios Capital. But Tom will give a very global perspective to this panel and also maybe challenge some of the conceptions about what innovation is. And next to Tom, we have Ben White of 21212, an accelerator based between New York and Rio de Janeiro, also seed fund, managing a seed fund now as well, and again, another LAVCA member firm. So with that, I'm going to start throwing out some questions. And Ben, I'm actually going to start with you on the other end of the panel. You launched 21212 with Brazilian partners in 2011. And in the last 2.5 years, an awful lot has changed in Brazil for startups and for entrepreneurs. What did you see in Brazil as an American heading there in 2011 that inspired you to launch 21212? And how would you evaluate today the quality of Brazilian entrepreneurs?
Sure. So, full disclosure, my wife is Brazilian, so that may have had a large part in why I wound up in Brazil. I don't really know still, but from a market perspective, you know, I had a background in digital media. I've worked in it 24 or 5 years now, and I spent a lot of time in Brazil. So I've been back and forth a lot over the course of a decade, and saw the market sort of ripening from a lot of perspectives. So in 2011, some of it was just serendipity and timing for me personally. I'd sold my last company and was in a position of like, what do I want to do next? And I actually got married in Rio, which is dangerous. I never left. But I got married in Rio, spent a lot of time traveling around and really seeing firsthand like where the culture's at and what the problems are that people are dealing with in Brazil. And also just a sense of, you know, where the consumers are at. In Brazil. So I think when I think about what attracted me as really primarily an operational guy, my background is much more operational than it is investor. I'm an investor, you know, by accident, I suppose, or by success of my product my product background. But what attracted me was a lot of the factors of the market. It's a large market, everybody knows. It had a lot of great momentum and kind of velocity headed into digital, and it was becoming clear in especially 2009, 2010 that it was on such a fast clip and at such a such a hockey stick that it was unlikely to turn around. That's every Brazilian's biggest fear, and everybody who's investing in Brazil is like, you know, is it at a tipping point finally? Is it going to finally start clicking, or is there going to be some reversal? And I think you know, I'm a consumer guy, so when I look at it and measure these things, it's always through that lens, right? Where are the consumers? The people who are spending the money, who want the products, who want the services, are they ready for those yet? And then I'm also an eternal optimist, so I feel like if that's the case, then it's likely going to be ripe with opportunity. So let's see, you know, you've got big market, you've got a market that's really underserved. So when you think about Brazil from the perspective of like a big ripe market, growing middle class, dramatically underserved, even in the analog world, right? So when you think about goods, services, access in the analog world in Brazil, it's way behind. And then, so when I put my digital product hat on, I say, wow, if I can reach a customer whose bar is already very low, they're already not getting access, they're already not getting a great service, with an innovative service that's already sort of proven to work elsewhere, and I know we'll get into some of the debate about copycats later, the merits and And you know, a lot of people have different opinions about that. But if I can work from models that have proven themselves elsewhere, and basically put products in front of people who are underserved, who don't have access, who are used to a low degree of service, I like those odds, because they say, well, there's a good chance that we're going to be able to build magnetism, momentum, and draw in you know, customer acquisition, build products that attract customers in that market. Let's see, third thing is probably like consumer culture. So, you know, as a guy who worked at, you know, I ran the digital business at MTV for a while. I worked at Sling Media. I've been a consumer guy. So for me to be functioning at my best, I want to be in a market where I feel like I understand the consumer. And I felt that way in Brazil, because I think there's a lot of affinity with American consumers. Obviously, it's a different space and time, but it's a very aspirational culture. It's a ripening consumer culture that they're drawn to a lot of the same types of products, services, goods, things like that. And that's important to me too, because when I think about innovation, I think about it like problem solving, you know? What are the problems that we're solving? And this maybe is even a good segue into breaking down what that's all about. To me, innovation is about problem solving. Why we wind up talking so much about technology when we're talking about innovation is because technology is a tool to solve problems. And it's one, you know, more and more that's accessible to, it's cheap, it's accessible, and it's a quick way to solve a lot of big problems, right? It's an inexpensive way to solve problems. Not every kind of problem, but certainly a wide swath of different kinds of problems. So, you know, there are a lot of people with a lot of problems in Brazil. So when I think about innovating, I say, wow, there's a big opportunity to actually innovate in Brazil if you're looking at innovation through that lens, through that sort of definition, solving people's problems with a new product or service. So let's see, we started about 24 months ago. We started 21-2-2, which is an accelerator. And for those for those of you who may not be familiar, I think everybody generally understands the model, but we put small amounts of capital into a lot of companies. We help them develop their products. We help them grow their customer base, so we spend a lot of time on growth and customer acquisition, and then we help them raise money. So we help present them to investors. You know, we're very good at the networking, and we're very good at knowing what investors want to see in those startups in order to feel good about making an investment. We do seed and, you know, A rounds mostly. We're starting to do some B rounds finally after a couple years. But it's a tough market in Brazil for sure, in terms of where I started and where things are today. I would have hoped for more progress on the capital side. I think on the consumer side, it's better than I could have ever hoped for. The market is maturing and ripening, and it's so clear that Brazilians are embracing digital culture, digital products, digital services. You see it across the board, and we all have the stats. You know, number 2 in Facebook, number 2 in Twitter. You know, number 3 in LinkedIn, and the trajectory. You know, a lot of my friends who develop international like SaaS tools and services, you know, they come to me because I'm one of the guys at the point of convergence there, and they say, oh, what am I good? My guys tell me we're huge in Brazil. What do I do? How do I go there? How do I attack the market? So I hear that all the time anecdotally. And you see it with people like SurveyMonkey as a good example where, you know, they're opening Airbnb is another great example where they had just meteoric success and unanticipated, frankly, in Brazil. It was just the customers started using the product because it was an open platform, and before they knew it, they had a huge success on their hands. So I think that's a very attractive part. That the consumer, to me, in Brazil, and the digital in the space that I work in, is far ahead of the investor base. And you know, we could spend all night talking about that and the sort of legacy and history.
And then where are the entrepreneurs in that mix? Are the entrepreneurs, you know, what is the median age of the entrepreneur that's passing through 21-2-1-2?
You know, it's certainly like 20s. mid-20s probably.
So it's just a fundamental difference between Brazilians in their 20s and how they, you know, their ability to innovate or the way they look at business opportunities as compared to an older generation?
Oh, what do you mean exactly? Sorry.
Well, I mean, you could have people in their 30s and 40s going through 21212, but you don't. So the entrepreneurs that you're finding, are the 20-somethings because those are the best entrepreneurs, or just the ones that are most willing to take the risk?
Well, you know, in what we do, that's an interesting point, right? Because in what we do, it's actually sort of a global culture, right, around coding and digital product development. And that culture is sort of HTML, CSS, Ruby on Rails, right? It's languages that people code in. And there's all of these sort of cohorts and magnetism around those sort of like cultural kind of like signifiers out there that actually make it kind of a global village amongst developers. That's why, you know, a Brazilian could come to a hackathon in New York and win a prize, right? Because they're sort of speaking the same language in terms of the palette, the literally computer languages that they deal with, all of that. And then everybody across the world, looks to the U.S. for innovation around technology. Everybody, everywhere I go, reads TechCrunch, and then they try to steal ideas from TechCrunch. You know, so there's this sort of universality to digital that probably doesn't apply in other categories as much, or maybe over indexes in digital, because everybody's looking to the same sort of media outlets and things like that, or the same reference points to set their bar. So I think that makes a big difference, and also that has to do with youth, right? It's like you're graduating, you're coming of age in a time where if you're one of the leading engineering students in Brazil at EMI or ITA, you're probably studying, there's more and more people studying computer science, and those that are studying computer science are doing it not necessarily to work in big data anymore, but they're doing it with sort of this entrepreneurial bent because those things have become, converged upon another. So.
Okay.
Yeah.
So I'm going to jump to Pedro. I'm sticking with Brazil for the moment. Again, eBricks was born out of a very traditional Brazilian media business looking for digital strategies, and in the space of about 18 months was able to reposition themselves. Can you share some examples of eBricks portfolio companies, and what are the expected outcomes for your investments? I mean, to what extent is eBricks really operating independently as a VC investor, or how will some of the innovations or the opportunities that come through that investment strategy in your portfolio companies potentially affect RBS and the media strategy? Are you investing in other sectors?
Okay. I'm glad you brought that up, okay. I want to make it very clear, we're not a corporate venture. We haven't started eBricks Digital to find opportunities to Grupo RBS. That's not the case. Grupo RBS, it's a very traditional media group, 56-year-old group, very entrepreneurial. It has already many exits within its core business, okay? And looking for diversification, it started eBricks Digital. Why in the digital space? It decided to go through education. We have an education arm as well. But digital space is because we believe that that's where we have high impact opportunities. That's where we have a lot to help the companies who invest and make the difference in that. So eBricks Digital has two main strategies, one in the growth side and one in the early stage side. The growth arm of eBricks Digital, it's pretty much a growth equity initiative. It's not a fund, it's a holding company that goes after 20, 30 million reais annual revenue companies and look for control or path to control. And it's very active in the management of these companies who invest, and they have already 8 investments in the growth arm. One of the cases we like to share, and it's the wine.com.br. Okay, it's when we acquired wine.com.br, 60% of the company in 2 years back was a 40 million reais revenue, and end of this year will be close to 150 million reais revenue, We deliver 10,000 bottles a day. Okay, those are great numbers. We have some not great stories as well to share, but another occasion. What happened in the early stage was when the market realized that we were positioned as real investors, an independent company, but within the RBS ecosystem, we were certainly in a very unique position where we had the agility, we had the independence, we were capitalized, and we had also all the reputation and everything a large company such as RBS can bring to this initiative. So the deal flow for early stage investments became amazing over the last 18 months. So we decided to do the proper way. So let's have a fund. It's a fund out of Cayman. It's an offshore, mainly funded by Group RBS. We have already 4 different investors as LPs, and that helps to make the point that we are an independent group. And just like other VCs, we don't want majority stakes in these companies. We want to look for 15 to 35% equity in each of these companies. And the only purpose and goal of these companies is to maximize the returns over those investments. And by any chance, take those investments and take to the RBS. It doesn't make any sense to us. Okay. Well, in terms of portfolio, do you want me to share? Well, we are I like when Ben shared about that technology is pretty much, innovation is pretty much a way to solving problems. I totally agree with that. The way we look at our strategy in Brazil, we try to balance our portfolio with 2 main strategies. One is try to find disruptive things. Yes, we like the disruptive things. Unfortunately, in Brazil, we don't find many disruptive technology businesses, and there's multiple reasons we don't find. There's a limited talent of engineering in Brazil, and unfortunately, we just don't find. I don't expect to find the next Twitter in Brazil. I would love to, but that's not our reality, and we have to be pragmatic in that sense. The way we look at innovation in Brazil is how can we find business models that through the technology, we are actually solving critical issues in the established markets. So I can give you a couple of examples here. There's we invested in a company that it's a recruiting platform for low-skilled labor, right? The technology itself is nothing special, but through SMS interaction, we connect the candidates to these job postings opportunities. So it's 90 million candidates in this low-skilled labor space we are looking for, and there's not a single solution to address this market. So we found that this specific company we invested solves a critical issue in Brazil. Just to give you another example, the auto parts industry in Brazil, we're talking about a 20 billion reais industry in Brazil. The mechanics, they can't manage their inventory. They are only able to sell the A curve of their inventory, right? Because the auto industry in Brazil is so diversified that it's impossible to manage the inventory. So we invested in a company which is a marketplace to put all the mechanics buying in a single place and all the distributors putting their inventories in a marketplace. Again, we are bringing an innovation through the technology that it's creating efficiency gain in a value chain. And that's pretty much how we look through innovation. Okay. Some more?
No, that's great, and I think we're really hitting on something here with solving critical problems and addressing the opportunities through not necessarily technological innovation, but applying technology to solve those problems. I'm going to jump to Mariano now. It was obviously a major bet on the behalf of Telefonica to launch Wayra, the amount of resources it's put. What was the driver behind that, and what how do you think Telefonica expects to benefit? Is it commercially? Is there going to be a financial return back to Telefonica? How will the company benefit within Latin America or globally from what it's able to achieve with Wayra? What have you learned about innovation since you've only been there, you said, what, about 4 months or so? 5 months. Okay, so I'll ask you to put yourself out on a limb here.
Yeah. Well, even when I'm here for the last 5 months, I know the project since it started 3 years ago, and what drives Telefonica basically is to get a grip on innovation. Besides the financial results that as an accelerator we can have, the idea is part of a broader initiative on trying to get innovation within the company and within the markets. And on the other side, this initiative was started by the former president of Telefónica Internacional, which was based in Latin America, and at some point it has the idea that a Latin American entrepreneur can start a business within his country and not leaving as soon as it gets some traction or something like that. And we think, even when I was looking at your slides, I realized that there's a lot of accelerators, VCs, government initiatives, but they lack this ecosystem stuff that brings them together. So as Telefonica, with presence in every single country in Latin America, we can try to be a good citizen on that ecosystem and try to help build a good ecosystem of entrepreneurs in the region. So we are after the financial benefits and the new innovation within the company.
I mean, can you describe a potential outcome from an innovation perspective? What have you seen, or what might you expect to find in terms of the types of companies that would be? Mm-hmm. I assume they're all technology.
Yeah, we have in 3 years we saw 23,000 startups that applied to our program. We invested in 304 globally, 197 are from Latin America, and except a couple, all of them are technology based. Even when only 8% of those have new technology in place that can be registered or patented, which is interesting because no one in Latin America, at least not all entrepreneurs, think of patenting their technology. It's weird. You talk to them and they don't care that much about IP, and this is something that at some point it has to change, but only this small percentage has new IP or new technologies. A lot of innovation happens using current technology. For instance, we have a company in Colombia, which is it's interesting because it helps the messenger voice to have. I mean, they are like an Uber, but for messengers. And when you look at them, you see that technology was something that was already there. I mean, Uber as a platform or the geolocalization stuff was like for the last couple of years, but they only try to get together demand and the underserved market that Benjamin was talking about. And for instance, we have a good company in Brazil. Once I really like that you put the agricultural business there, and they are trying to get all the Brazilian cattle on one cloud service that let the Brazilian haciendas or facendas to export and get more Hilton quotes to export. So when you look at the technologies, it's only an SMS that it sent to track the cattle, some cloud services that were already on provisioned by Telefonica cloud services, and a good NFC or QR code ID, and that's it. So it's interesting. You look at people that don't go after technology per se, but how to solve some people's problem, which I think I'm repeating what everyone said before.
I'm just curious to hear, do you have any idea of the median age of the entrepreneur coming through Wayra?
Well, it's interesting. We have a huge amount of data, but we don't have that data. And this is interesting because if I look at that, one of our most successful startups is from Mexico, which is called Cubo Financiero, which is crowd lending in Mexico, which is really weird to get that concept to a traditional society that relies on banking only because the law makes them to be on the system. And they are older than me, which is a lot. so we have a lot of people on their 20s, but we have a lot of people under 30s and 40s. Yeah, a lot more than 40s.
Okay, good to hear. So Tom complained to me before the panel, I'm going to out you, that he was the only panelist who was not a straight technology investor. And I will say, again, at LAVCA, we take the broader view of innovation. But you do have an incredible global view, Tom, in terms of the markets that you've been active in Africa, obviously the Middle East, I think parts of Asia as well, Europe. And how do you, well, first of all, describe a little bit of the types of businesses that you're investing in with Abraaj, and how do you identify talented entrepreneurs or business leaders in those markets, and what types of companies you're backing?
I think what I actually said was, am I on the right panel? Is this 680 Park Avenue? It begs the question, I was listening to these guys, all very impressive, is innovation confined to digital technology? And, I think you have to look at the industrial base of the US, for example. You just have to look around at this city, at where people are employed, where revenues and, more importantly, profits are generated. And, you're only going to come to the conclusion that digital technology is a fraction of the GDP of most countries. So, it's tough to, and I think what's happened over the last, 8 years is the entrepreneurship debate, the innovation debate, to some extent, I think hijacks is a tough word, but it's become very closely allied to early stage technology, the Facebook example that people look at. And we occupy the rest of the world, right? So we look at businesses that aren't typically digital companies. They may not even be digitally enabled companies. And I'll give you a few examples. But in our view, these are very clearly entrepreneurial success stories. And what's more, they generate a lot in terms of employment growth across markets. And if I was a policymaker, I would be very concerned about spending so much time angsting about starting companies and less time angsting about scaling companies to create employment opportunities. So just looking at Latin America specifically, in Peru, we invested in a business called IASA Corp. It is the Accessorize, for those of you who live in New York, it's the Accessorize brand in Peru. And the brand they use is Do It. And they now have a subsidiary brand called Do It Kids, and they sell, millinery, jewelry, scarves, etc.
It's the Claire's of Latin America.
Oh, is it the Claire's?
It would be
Sorry.
the New York analogy.
The Claire's, perfect. So we invested in that when it was, I think, about 15 different outlets. And the thesis behind this company is it buys into middle-class discretionary expenditure, which if you look at the growth of Latin America or Peru over the last 10 years, it's been a significant uptick. And discretionary expenditure, and also modern retail. So when people build a mall, they need shops to go in malls. They need Do It in part of it. So the founder, a guy called David Benavides, actually is the second generation entrepreneur in that family, which is very interesting for Latin America because family businesses still predominate a lot of traditional industry in Latin America. So David Benavides took that from 15 outlets in Peru into the second cities outside Lima. And then he grew it, with our help and capital, into countries around Peru. I think 5 countries they're in now. So they have 300 outlets. So to my mind, that guy's an amazing entrepreneur. I'm not sure how much technology he uses, but he employs a lot of people And he's taken a relatively modest company and investment and scaled it substantially. Sticking with Peru for a second, we also backed a guy called Gaston Acurio, who's a famous chef, the most famous Peruvian chef. Right, and funny enough, David Benavides was playing a game of golf with somebody, and he said, oh, you should meet these guys. Abraaj got introduced to the chef. And what he's done is he's taken Peruvian cuisine, which hadn't traveled traditionally internationally, but was an amazing cuisine, an upcoming cuisine in Latin America. And he created a number of different brands, La Tanta, which is his second brand. So when you go to do it in the Jockey Mall in Lima, you go to do it, and then you just go down one level, and you can go to Tanta and have a coffee and something to eat. Same thing, middle-class discretionary expenditure. Same thing, modern retail. You need outlets like this. So he grew that into several countries in Latin America, again with our help. He opened in New York. Some of you may have been to La Mer restaurant, 11 Madison. I hate to say it's actually closed subsequently. They didn't quite get that right. But he's in San Francisco. It's one of the top restaurants in San Francisco. He's gone to Europe. He's into Africa, Middle East. To my mind, he started life as a chef, but to my mind, that guy's a great entrepreneur. And he's building quite a big business. We backed still in Peru actually, we backed a tour operator who started life shuttling people to Machu Picchu, international people coming into Lima, taking them to Machu Picchu, and then thought, I offer a good service here, I can do this in Colombia. Actually, there's quite a lot to see in Colombia. There's quite a lot to see in Ecuador, Galapagos, etc. So he expanded his business starting in Peru to the surrounding countries. And again, to my mind, he's an amazing entrepreneur. And I could go on. In Colombia, we backed a guy who saw the discount stores model in operation in Turkey. And this is a very simple model. It's super modern retail in one sense. They take a very simple store format with very little frill, and they literally just stock 500 SKUs products. So you don't get all the ranges of toothpaste, you just get one. And because they're able to smooth out a lot of the cost in supply chain and distribution, they're very cost competitive. And he's scaled, I think, over 300 stores now as well. Employs a lot of people. So, and I'll give you one more example actually, which is a favorite one of mine. We invested in a dairy business in Kenya. So let me move out of Latin America for a second. So this guy is a milk producer, and he gets his milk every day from 65,000 farmers, literally with 5 cows. And the supply chain is people on bicycles, kids actually, on bicycles, getting the milk, 10 gallons a day, taking it to a shop. It gets aggregated, put on a motorcycle, and then finally it gets to the production facility some point during the day, and they produce their milk. It doesn't look like it will scale. So we invested, I think, $18 million in that company. And today they scaled it. They go and get their milk from, I think, 200,000 farmers. And so what have you done there? So each of those farmers supports about 5 other family members. So your $18 million investment supports 1 million people in Kenya. So to my mind, to slant the debate too clearly towards digital technology, I mean, how many people does Facebook employ actually, is missing out on actually what is basic entrepreneurship that's been driving economies for the best part of the last 200 years. And this is great, it's perfect and it's good, but is it going to solve the biggest issue facing these countries, youth unemployment? In my mind, no.
Okay. I love the example that you gave with the restaurants in Peru. If we had done a slide where I was doing automotive in Mexico, we actually could have put Peru up there with the food industry, because I saw the data recently. It's extraordinary, the number of millions of people, the percentage of gastro-tourism going to Peru today. The country has positioned itself globally as a destination, and obviously all of the opportunities that go alongside that. One question I want to throw out to the whole panel, whether you're investing in a technology business or a non-technology business, one of the challenges that you'll face in Latin America is staffing a startup or hiring for a traditional business. And one of the questions that we think about a lot at LAVCA is where is the educational system in Latin America, and is Latin America producing a workforce of entrepreneurs, innovators, or just high-quality professionals who can take the region forward in both innovation and traditional businesses? So does anyone want to chime in on that?
Sure. Feel peer pressure. I think it's a real problem for sure. I mean, in the space that we're in, it's maybe less acute. You know, Rio, for instance, one of the reasons we're in Rio is we got some of the top universities and the most number of engineering graduates. So there's a ripe crop of like sort of young engineering talent. A lot of them are looking for a reason to stay in Rio instead of having to go somewhere else, which has always been the typical path. So we've done well, but it's always a problem. And as a matter of fact, one of the things that we started this year was a talent agency, basically a recruiting agency within 2122, because we couldn't afford to use recruiters, and talent is just such an ongoing problem. I mean, it is everywhere. I've developed lots of startups here in the US. Finding good people is always the hardest thing, and it's the most necessary thing, and it's the thing, if you do it right, that takes the longest. And I think I would say apples to apples, it's more difficult in Brazil to find really top people. But I think, and I do think that's certainly a byproduct of the education system. In fact, most of the good engineers I know, they sort of learned a lot of things informally. So they sort of, when you talk to them about the state of the education system for engineers and things in Brazil, they say, well, I learned a lot of this from peer learning with the group of people that I was going to college with. We were all interested in this, and we sort of had to learn it on our own. So in our space, and I can't really speak beyond that, but I think in our space it's a real problem, and it's one of the things that I always identify as, you know, hey, if I could wave a magic wand and influence the Brazilian government anyway, it'd be like, look, you should embrace kind of a US 60s style immigration policy, which is people with graduate and doctorate degrees, you throw the doors wide open to them and you say, come help us. You know, kind of, that's the fastest way to educate. You know, starting with elementary school, okay, you know, I'll be dead by then. It needs to happen too, but I think peer learning amongst people who have experience versus people who have a dearth of that experience is really critical. And in those cultures that lean a little left and are sort of more protectionist and don't want immigrants or taking people's jobs primarily, I think this seems a popular defense against that. You wind up with big problems. And we hear this all the time. Even we're a member of Startup Brazil, so we're one of the accelerators, and this is a problem that everybody took to the government and said, we need to solve this problem because there's a certain percentage, 25%, I think, of the applicants that are sort of earmarked for international, which is interesting because it's the inverse of Startup Chile, right? Which leans much more international, much smaller national. But there's 25% of the applicants to Startup Brazil can be international. But there were all kinds of problems getting, even in that first class, getting those people the visas that they need to actually come and take advantage of the program. So,
you know, I just to add to that, it's the type of education that's relevant, right? You know, we invest in Egypt as well. Believe it or not, you know, we have a technology company there, actually, funny enough. Believe it or not, they can't find people. They can't find people in Egypt. And it's not because the school system or the university system is lacking. It's excellent. You find more PhDs driving taxis in Cairo than any other city I've ever come across. It's just there's no vocational training. So how do you learn to become somebody who is a systems engineer in a country like that? You have to go to the US, and guess what? You probably never come back, is the problem with it. So, you know, even in countries where you think there's mass youth unemployment, where there is, you can't always find the right people. It's part of the way I frame it. And by the way, we do a lot to support entrepreneurship at the grassroots level as a firm. We've invested a lot. I won't bore you with it, but you know, we've looked a lot at this space, and there seem to be 3 frictions to growth for entrepreneur-led businesses. One is access to finance. You know, you can bootstrap a business all the way through. Fantastic if you can. My advice as a financier is if you can avoid it, don't take capital from anybody. Grow your business yourself. But most people do need capital to grow, to take on more employees, whatever it is, buy machines, etc. So frictions to grow, it's access to capital. The second one is, and this is where this comes in, is access to best practice. And part of the reason why Silicon Valley is so vibrant, best practice is next door, it's in the coffee shop, people share ideas, it's very easy, it's online, it's very easy to find out how to solve this bit of my problem. I need to hire a marketing guy, no problem, let me find out this way. I need to do this, no problem. What does a business plan look like? No problem, here's a template, etc. So best practice, access to best practice, which is increasingly finding its way into places like Brazil and Latin America. The third one, which actually is the most important thing, is access to markets. It's no surprise, I think, that Benjamin's gone to Brazil and said there's a great opportunity here. You have got a massive consumer base waiting for your product. It's no surprise that the biggest economies in the world are the biggest populations in the world. The EU, US, China, India, Brazil, etc. These are the biggest economies because they've got the biggest markets. So how do you get access to a market if you're in Uruguay? You have to build a product that can work in Uruguay and over the border. And that is the biggest challenge I think that people face in truly scaling a business. Starting a business, easy. And you know, you talk to entrepreneurs, the biggest problem with creating a business is not how many days it takes to get your company registered. All over the world we've looked at this. People, entrepreneurs find a way. If it takes 60 days, they wait 60 days and get their stamp on their company. It begins. The biggest issues to success, finance, best practice, and most of all, markets.
You know what, I want to ask, sort of following on that, Mariano and Pedro, what role you play as an accelerator with Wayra or as an investor with eBricks in educating or cultivating, you know, the entrepreneurs that you're working with? Because presumably, and you can tell me yes or no, they're already graduated from good schools. I mean, tell us a little bit about the background of some of those entrepreneurs, and in what ways, particularly in Wayra, are you able to do what Tom was just describing, which is create a community of talented entrepreneurs and innovators that are teaching each other and sharing?
Sure.
Well, I think that one of the most important things we try to separate when we select a certain entrepreneur is who are the potential company builders, okay? And that plays a totally different perspective when you select an entrepreneur. We're not looking for just like genius that they have an amazing idea. In Brazil, especially because of the lack of disruptive project, it's all about execution. And to succeed in those opportunities, you have to have operational skills in a very good shape, and you also need a mindset of the entrepreneur that is willing to learn and actually create a company. Create the fundamentals of a great company, have a culture, apply the formality of a great business since the very beginning. And by the way, I think I will revert to the point of that everybody raises the question, how liquid is the Brazilian market? Can we actually sell companies in Brazil? And for me, that's all relates to education and building a great company since the beginning, because in my perspective, and this is the very strong assumption we work on, is that the problem in Brazil is not about demand for buying good companies, it's supply of great companies. And in our perspective, we are building the next generation of excellent companies based on the right fundamentals that will create companies to perpetuate. If we'll exit in this journey, okay, it's our goal as a fund. At some point, we will leave this company in 4, 5, 6, 7, 8 years. No hurry, but at some point, we will exit this company. but we are helping build companies to perpetuate, okay? And then what we try to do is really take advantage of being in an ecosystem that we have a group RBS, very connected to the market, a great reputation, lots of great practices within its management style, and also the whole portfolio of eBricks growth, and also every single connections we have within the region to help the companies extract the best practices of each other. So I totally agree that we need to help these companies think of educating its entrepreneurs, okay? This is a problem we have. This is a real problem because we are now, what happened in the past is that the great people in Brazil, they weren't thinking of starting a business. They would go to the traditional job career, right? They would go to McKinsey, investment banking, they would go to the industry as a whole. They wouldn't start a company. Those entrepreneurs who started companies, I mean, 10, 15 years back, they started companies because they failed. They failed at first. And that's where all the problem starts, right? So now we are having a more inflow of money, investing in these entrepreneurs, and we are encouraging great people, highly educated people starting new businesses. So are we close to the level we need? No, we are way behind. But we are moving in the right direction. And I still need that, technology, infrastructure, and education. Those are the pain points in Brazil to help the company succeed. I mean, the economy as a whole succeed.
Mariano, you can speak pan-regionally because there's a lot of Brazil on this panel. If you can talk about some of the other markets or Argentina.
Well, if I go back a little bit on the question on education, I think that the biggest problem is not the lack of engineers or MBAs or whatever, even when this is a huge problem in the region, right? But I think that the big problem is that these kind of people don't think on entrepreneurship as a way to live. They think on getting into a big company and that's it. So this is something that it's more cultural than a lack of education. When you look at Latin America, in the whole region, not only in Brazil, you realize that that failure is a stigma that everyone has. I mean, there's a huge fear of fail, and this is something that not even a lot of bright people can handle, because it's a social stigma to have a fail in your career. And regarding how can we as Telefónica and Wayra help the startups staffing and how can help them grow as a company builders. Telefónica is a company that it's a group of financiers and a lot of processes. So with that in mind, we help a lot of entrepreneurs and to understand that it's important to get things done and to have a lot of metrics and to have a lot of milestones to succeed. So that way we help them define a product, we help them define a market, we help them to try to think as a company builders and not only as a programmers or entrepreneurs. And on the other side, we have a program called Wayra Friends, which is something interesting. You have a lot of talent within Telefónica that was hidden in the company. So we let them understand and know every single startup that we have and to apply and to help them on the thing they know. For instance, I have this interesting case on one of our financial officers, CFOs in one of the countries that started helping a startup on social gaming just because he's a gamer. You will never think of a CFO being a gamer. So it was interesting because he sat with them and started talking about finance and how to start raising a new round, and they had no idea. So we have this program that tries to find the talent within Telefónica and within the ecosystem that the companies don't have, and that way try to help them become a company builders instead of just a good programmer with a nice app or something like that.
So mentoring is key.
Yeah.
I have plenty of questions, but I think it might be a good opportunity to throw questions out to the floor. We usually get a lot of good questions here at the Council of the Americas. So if anybody does have a question, please raise your hand. I don't know if there's a microphone. Excuse me, I see a hand here. I think somebody's running to get a microphone. I think, go ahead, Patrick.
So the question I have is this. Say I have a great startup, and so I have the hot startup that everybody wants to invest in. And my options are to go to Chile, where the government will provide me with financing and a visa to stay for a year, or I could go to an accelerator or incubator, or I could go to an early stage VC firm, all with the idea that in 5 years I'll sell it to Abraaj or raise money from them and eventually take it public. Why would I choose, I guess given the different options, or 21212 or Wayra or eBricks, I just would love to hear from each of the panelists why your firm and your organization is the best fit for a startup, you know, who wants to make it big in Brazil. Sure.
You should go to eBricks. No.
No, I want to know, I guess
No,
I want to know,
I'm
you know, in terms of economics, in
No, I'm
terms
sure,
of
I'm sure.
program, in terms of
No, I'm just joking.
everything.
No, I think that this is a great question, and by the way, this is a question every entrepreneur should raise, because most of the time we encourage the entrepreneurs, even though we like the business and we like to invest, we want to make sure that they do their due diligence to find out whether they have the right investor in front of them. Okay, so whether you're gonna take money from government, Accelerator, or eBricks, it's more of a, what's your goal? What are your values? What are your gaps? What are the helps you need? And then once you are very intellectually honest, and you know exactly what are your gaps and what exactly you need, you do your due diligence and you go after this smart money, okay? Most of the time, the entrepreneurs, they don't do that. I need money to survive. Anyone who wants to put money here, I'll get it. I'll take it. That's the worst decision ever. Because if they don't make sure that the incentives are aligned, that the goals and the values and the principles, the way we are thinking of creating a company are in line, at some point we will come out, and then the partnership will not happen, will not succeed. So you have to first do your due diligence, and then you will have your answers.
Yeah, and it's not exclusive. I mean, you can get to Startup Brazil and get to Wayra or 21212, and that's it. What a lot of people don't know is this difference between smart money and the kind of help that you can get from a good fund or accelerator and just raising money. So if you get the same money from your friends and family or whatever, I don't think that they will have all the abilities and the expertise that the people from eBricks or the people from 21212 has, or the Abraaj group has. So this is something that a lot of entrepreneurs should ask before they apply to any single program. And this is something that they don't do.
Can I just sell my fish a little bit more here?
Yeah, please.
Okay.
So
one of the things we have, one of the problems we have in Brazil, and then I like the fact, Benjamin, that you guys are doing up to B rounds, because this is a real problem we have in Brazil. Okay, in a more mature markets such as US, you have a very specific group of investors in every single stage of the cycle of the company. Okay. And venture capital is a stage financing business. You have to put some money, and then you know that money will last for a certain period of time, usually 18 months or so, and then that money will take you from A to B clearly, and then at that point you are able to raise more money that will take you to the next level. So in Brazil, the situation as of now is you have many seed round investors. You have every angel investors, every individual has a 200,000 reais or 300,000 reais to put in a startup, right? And then if you look to the other extreme, you look at private equities. Many private equity firms, they have 20, 30, 40, 50 million reais to put in a company, 100 million reais to a company. The problem is to find good companies in that stage. But there's a place in the middle, which is the round A and Bs, and you don't have many investors there, okay? And this is a problem because you are investing in a company in the seed round, and this company has shown that it made significant progress, and because of the lack of investing activity in that specific stage, it might not move on. Mm-hmm. So what we're trying to do, and this is our investment thesis, is we need to be able to have a certain size of a fund that in one hand has a good diversification, so at least 15 companies, and then we need to be able to have a significant amount of money for round A and Bs, for the top performers. And of course, you're gonna keep investing if they actually show results. You don't do the escalation of commitment problem, right? You're not gonna keep putting money in a company just because you've invested in the beginning. It's every single new investment, it's a new analysis, and you have to put money in the top performers only, okay? But you have to have the money to do that. That's why we put our own money, and we have other investors to have a sizable. I mean,
just to cite, you've co-invested with Cate, with all the Monashis, most of the lead venture funds.
Sorry, but this is a very important thing that Cate is bringing up. Okay, the Brazilians, and I include, and I'm the only Brazilian here, so I'm very comfortable in saying that they have a very sense of ownership. They want to own. They want to be the lead investors. They want to have crazy terms in the term sheet. It's pretty much the private equity mindset doing venture capital. That's the worst can happen to make this industry succeed. Okay, so and we are not doing that. Okay, we are bringing something different to the Brazilian environment, venture capital environment in Brazil. Okay, we want co-investors together. We don't need to be the lead investors. We want to make sure that we have co-investors that can actually help the companies. So we co-invested with Kazakh, Monashis, Qualcomm Ventures, and many other. We're talking now with venture capital from the Valley, and we encourage that to happen because this is important. In terms of what are the terms we like in these deals, very basic terms. We like to have very friendly terms that whenever we are taking this company to a different level and we're going to offer this company for a venture capital in US to buy and take it to the next level, the terms are in line with what they've done before. It's not like crazy terms like that really damage the next staging of financing.
Go ahead.
Yeah, there's a group that's been around in Latin America for a long time called Endeavor. You probably know them. Fantastic model, fantastic group. Historically, they haven't provided capital, but what they provide is access to best practice, either directly from their team or more likely from peer entrepreneurs, either who have been successful Endeavor entrepreneurs or people from the US, etc. So to your question, directly, I'd avoid taking money for as long as you possibly can, because your equity is really what you're working for at the end of the day. And so groups like Endeavor won't take your equity, but they will help you solve problems. Although they do have a fund actually to it, but that's for slightly later stage Endeavor entrepreneurs. But no, I would definitely consider using those guys.
And do you want to pitch what you're gonna, or you were gonna leave it there in terms of why somebody should come join 21-212?
I'm not gonna be a shameless salesman. I'll just say that I think I agree 100% with Pedro and Mariano about due diligence isn't both. It should be bi-directional. It doesn't happen often enough in Brazil. So you have entrepreneurs that will jump at the first person who's going to write them a check, and I agree that's usually turns out to be a mistake unless they just were lucky enough to meet one of us. But I think that, you know, the thing that we really focused on, the problem we focused on solving was about this sort of experience gap. So we said, okay, we're at the beginning, we're in early seed, we're seeing the patterns are, there's good raw talent, there's not a lot of experience. How do you offset and how do you kind of help do the knowledge transfer as quickly as possible, right, with the best people possible? And that's sort of what our thesis was from the beginning. It's borne itself out. We have a big network of mentors. Every accelerator is a big network of mentors. You know, we try to be very focused about pairing mentors who have real experience with companies who have those same problems. A lot of that will be mentors here in the US with companies in Brazil. And that's starting to lead to really interesting things too. We have a company, Queremos, that started in Brazil, had some great mentors here, and eventually between the conversations that we all had, it was like, hey, we should be going to the US. And they got comfortable with that because now they had multiple sort of connection points in the US and people encouraging them, saying, yeah, I think this idea would work there. So you know, our differentiator is probably this operational focus and expertise that we have, and we have a staff of around 25 people that are, you know, coders. We have sort of a CTO level engineer and a few coders and a high level product person who used to work at Global, who's really focused on product with the teams. So that's where we spend the most of our resources, and the amount of money that we invest is pretty small, at least on the accelerator side.
So Patrick, you can decide later. Well, you can take meetings outside. Any other questions? Yes, right. Well, there's one here. No, go here.
My question is about selection. Aren't we in Latin America in a, let's say, a previous phase? Because here in the US, wherever you go with university, there are incubators everywhere. So you can choose from a tremendous pool. In Latin America, there are no clear Silicon Valleys yet. There are no clear national champions yet that, of course, create an ecosystem around them that, okay, you can. There is Endeavor, of course, you just mentioned, and okay, maybe also Telefonica has launched this tremendous, how do you call it, campus meeting, what?
Campus party.
Yeah, campus parties. That again is a good way to have, maybe to see many at the same time. Aren't we in a previous phase, and that is also a question for you, Cate, in which we should encourage many more getting together so that, because okay, to invest in a member of a family firm, I'm sorry, but this member probably would have been funded in any case, and because what is the ultimate goal? The ultimate goal is to promote innovation, to invest in Gaston Acurio, of course, a guy who is a world leader. So how can we move away from the situation right now and have a very big pool, so that would be good for you, good for the countries, good for the entrepreneurs, and to be able to select much better and to create global leaders in the field?
I mean, I think, frankly, this is what we're seeing happen right now. I can't tell you how dramatic the difference is in Brazil today in 2013 than even in 2009. Trips that you made, meeting with entrepreneurs, just even the definition or the ability to talk about venture capital and entrepreneurship. And I asked this question about age because I think it is fundamentally a generational shift. I mean, the two real drivers that I see are a youth culture of sons and daughters, frankly, in many cases, of the wealthier families that can send their children to study abroad, that are coming back, and again, instead of going into a traditional business opportunity or government, are looking to be entrepreneurs, innovators, get involved in an organization like 21-2 or eBricks. And then again, the internationalization of these markets. Ben, married to a Brazilian, back and forth, 21-212. Pedro is regularly here in the States. All of the international entrepreneurs that are being attracting through Wayra, or a global firm like Abraaj betting on Latin America and getting involved. So honestly, it's a question of time. These things don't happen overnight. There are a lot of big problems to solve, so there's still a long way to go. But you certainly see the region heading down that path. I don't know if anybody else wants to.
No, if I can add something, I think that every country is it's in a different stage of development. I mean, for instance, Argentina. I'm from Argentina, so I can say in a nice way.
Everybody can say unpleasant things about their own country.
Argentina has a good ecosystem because of the first startups that got famous in Latin America came from Argentina. So you have Mercado Libre, you have Globant, you have Digital Ventures, some other companies that were sold, Patagon, you have a lot of companies. So when you see that happened like a lot of time ago, long time ago, you realize that people can have role models. And a lot of countries don't have role models to follow on. And this is what you see in countries that are starting to move over. So I think there's a real opportunity to leapfrog on that. And if the players on the market, the accelerators, the VCs, the Endeavor, and everyone can get together and help them out, I think Latin America is poised for success.
Do we have time for another question? Okay, any more questions? There was a question here.
Hi, my name is Matt Kligerman. I live in Sao Paulo, and I run a digital marketing agency down there. And I see a lot of businesses that have brought down e-commerce models from the US and copycat models in different verticals and brought down to Brazil. And are finding it a lot more challenging than they originally expected down in Brazil, because Brazil is a very different animal than the US is. Logistics is really hard for them in Brazil. Warehousing is really challenging. You see e-commerce conversion rates in Brazil are about 1/10 of what you see in the US. Cash flow is really challenging with partial payments over a year without interest is what consumers expect. And so it's been very challenging. As Cate mentioned, some businesses have closed recently. Olivier Shoes for You, and I know other e-commerce businesses are struggling. I'm curious from you guys if you think we'll see innovation in the e-commerce model in Brazil to try to compensate for some of these factors that are very different in Brazil than the US, or if you'll see some different businesses growing in Brazil, these B2B businesses, to solve some of these problems that e-commerce businesses are facing.
Sorry, even when I'm not talking about Brazil, okay? Because I am not from Brazil. Sometimes it seems to be that there's a lot of copycats in Latin America, but a lot of times they are refining models and adapt them to our reality. For instance, when you realize, talking about Mercado Libre, for instance, they were the first to start the fixed price sale, even before eBay. So when eBay invested in them, they started taking a lot of cues from Mercado Libre. So the interesting part of Latin America, maybe Brazil, you have only one legal jurisdiction or one country. What is interesting about Latin America is that you have so many challenges ahead that you have to innovate in processes. I think you guys put that on a slide. So you have to innovate in processes, in supply chain, in a lot of stuff that don't make the traditional copycat model that applies to, for instance, I don't know, maybe Rocket Internet, to companies that you see in Latin America. And it's interesting.
Can I, sorry, just give a non-technological answer. I think it's frankly ludicrous that people poo-poo the concept of, quotes, copycat. I mean, can you imagine if the first person to invent a car started asserting that, oh, I invented the car, you can't make other cars, etc. Honestly, I just find it completely bizarre that people think that that's even remotely an issue.
And just out of
my question, I guess I'm not poo-pooing copycat. I'm more saying it's challenging in Brazil to bring a state model down to Brazil. I'm wondering what kind of innovation you'll see in e-commerce to adapt to those changes, or what kind of B2B business you'll see to help solve some of these solutions for why Brazil is different to help these companies.
First of all, I think that we look at e-commerce like if it's a different animal than any other sales channel. It's just another channel. And at some point, every retailer will go online, period. Okay, is it a low margin business? Yeah, it can be a low margin business. The way we approach at eBricks, we like segmented e-commerce. We want to get rid of price comparison type of businesses. where they use, I mean, that's where you're going to find very hard time because of the low margins and so on and so on. But you can have a great e-commerce where there's not the price comparison issue, where you can add significant value, such as the wine business. Wine, you don't compare prices in wine. Each brand, each label has its own price. And more than that, you can have, just using as an example, experts throughout the world doing the curation of that choice of those wines, those labels we have there, and you can charge for that. And then it can be a great business. And that's only one example. In terms of the copycat thing, I mean, not anything. I think that whatever you don't deep dive in the analysis, what can succeed in a certain market, the probability of failure is huge, right? And whenever we talk about copycat, the thing is those guys who think that, oh, I will just take that idea and bring it down here with no analysis in the local market, and I'm expecting to succeed, then it's a failure. But you can replicate a certain model for sure and make it happen in the local market. But you definitely studied that market. I mean, copycat per se, it's not an issue. The issue is not studying certain market.
Yep, I just want to agree with that. I think it's like sort of this cultural bias around that term for sure, right? It's like you don't call, Instagram a copycat of Hipstamatic, which it was, except they just had a cloud service, but that's because it's American and it's like we're all innovating and blah, blah, blah. And then you move to an emerging market and it's like, oh, they're copying stuff because they can't come up with something themselves. But, it's like Steve Jobs said, the best people steal, right? And the best innovators steal. And it's like, I think that's the reality. It's like a weird thing that I get asked this question everywhere. What about all the copycats? And I just think it's like a red herring. Yeah. It doesn't make any sense. And anybody who does this for a living, like I'm not bothered by it at all. And I think but it is, Pedro's point is really poignant in that what it is if you're just reading TechCrunch every day looking for an idea of something to start, then you have a whole slew of copycat ideas that you could just say, oh, I should do that in Brazil. And that's a very low filter and a very low bar, which is why you see a lot of those companies that are just, they're not doing it for the right reason necessarily.
It's all about implementation and building great companies. Yeah. Anybody can have the idea, right? That's not what makes you a great entrepreneur, and that's what venture capital and private equity is there for, right? To create a great company out of a great idea, which is a lot harder. Yeah.
And just to talk about e-commerce for a second, I think execution in e-commerce in Brazil is very, very difficult, right? So there's the rub, right? It's all about execution, and executing in e-commerce. Logistics are a nightmare. There's all sorts of problems that make that a difficult business. I believe in it long term because of the lack of access, right? Brazilians want products. They'll go to shopping malls now. Look at what happens to shopping malls in America. They're dying because we don't want to go to shopping malls anymore, because e-commerce is easier. It's a better service for many people. And that eventually will happen, but it's not a better service if you order something and it never shows up, right? And the margins are difficult for those companies. Last point is, I think I've started to see a bunch of these companies that are like SaaS-based services to help out e-commerce providers. Yeah. I was telling Patrick about one that does shipping. So they're first mile shipping, right, which is a nightmare in Brazil. You start in e-commerce and now you spend the first 6 months of your life at Correios, waiting in line to send your package for overpriced and whatever, and barely have any margin left. So these guys said, oh, we see that problem across the landscape, so let's solve that by aggregating all the people who need to, all the small e-commerces that need to solve that problem. Who knows whether that'll work, but it's an interesting idea, and I think you're going to start to see a lot of those kinds of innovations.
Great. Well, I think that's a great note to end on. I know we have some time for a reception. There's a nice opportunity to speak with the panelists one-on-one if anybody has additional questions. And I just want to thank so much Council of the Americas, Susan, for the invitation and the opportunity to be here again. There are more and more things that we're doing together. We actually partnered on an event in Miami this year as well. So lots of things for us to do together, and especially to thank the panelists we have here today from around Latin America, around the world, and really so much for taking the time to be here. It's been great. Thank you.